on British pound sterling paired against the AUD yesterday. Right. So we are live right now. We are live. I'm testing all the equipment right here to make sure everything is going on nice. Right. Okay. Yeah, Rich Kid, you're welcome. Welcome to the live stream. Rich Kid, welcome to the live stream. Rich Kid. You are welcome to the live stream, Rich Kid. So I need to verify if we are online. Okay, we are live on YouTube. So I'm gonna copy the link right now to traders in the Telegram group so that you can join us. We are live on YouTube and TikTok. Right. Great. So thank you guys. If you are watching from YouTube, you can ask questions and then make sure you follow, subscribe, and put a comment down. Right, guys. So, guys, let's start a live stream. We are live right now. Right. We are live. We are good to go. Right. So guys, as you all know, you can ask questions. Ask questions about the market. You can make suggestion of any asset you want us to trade. Analyze. Yeah, we are here to analyze, not here to trade. Okay, and a beautiful weekend Friday. As you all know, guys, I don't usually trade on Friday. I'm so very selective. Only if I have an existing trade, and if that trade is in profit, that is the only condition that may sometimes make me to add maybe to my trade, right? So I told you guys I disclosed my positions in the market. Someone said, what are you trading, boss? I'm currently holding British pound sterling paired against the Australian dollar. That is the current trade I'm taking. I told you guys I made an entry. I think is it yesterday or on Wednesday. I told you guys I'm already shorting the British pound sterling paired against the Australian dollar. So this is what I'm doing. And I'm looking for a way to add to my short position. If I can see a pullback, I would like to add to my short position, right? So I'm seeing the trade, and some traders took the trade in the Telegram group, and some said they are out in break even. So sometimes you have to give the market time for the market to fluctuate, right? So there's a way you set your stop loss and your trailing profit. You don't just trade profit, right? Because yesterday when I told traders I initiated a short entry at this medium right there, a lot of traders actually placed their stop loss at the high of this bar right here, and unfortunately those traders have been caught out in this trade. So this is why I told traders I don't set my stop loss based on number of pips. So if you do that, most time the market will hit your stop loss. So I place my stop loss based on the high of Wednesday bearish candlestick. Now I told you guys this is where I'm going to be placing my stop loss. You can see how the market rallied up. The market tested our patience, our knowledge, our skills, our intelligence, and then the market later continued the downtrend. You can see that. So for those who made a short entry right here and they had their stop loss at the high of this bearish, pin bar, they have been cut out of this trade. They have been cut out, right? The market actually know what you are trying to do. The market know where you place your stop losses. The market knows that. So the market know what you are doing. It knows where you put your stop loss and your take profit. So one of the ways the market try to reduce the masses from taking advantage of a setup is to try to cut out traders, hit traders stop loss, right? So there's a lot of stop loss on which occurred right here. And see, we got a stop loss on, and some traders actually wanted to go long based on this bullish bar with the belief, okay, this is a double bottom, so let's go up. And then there was another bullish engulfing bar to the bearish pin bar right here, maybe bearish arami right here, and then the market reverses down. So like I told you guys, it's not just about trading candlestick pattern. It's not just about trading bearish engulfing bar, bullish engulfing bar, pin bar. There are different factors. There are a lot of factors you have to combine before you can decide, oh yes, this is a legitimate, this is a genuine pin bar and not a fake and not a trap, right? So the institutional traders know, they know you are learning they know you are actually learning the engulfing bar, the pin bar, the morning star, the chart patterns. They know all these things. They know all these things. They know you are trying to make all these things, use all these things to make money. So if you make money, no, it's gonna put your broker into trouble. No, and if you make money, there's no way the institutional traders can make money. So they have to reduce the masses from taking advantage of a setup. So this is what really happened right there. So if I can see a pullback to this level right, I'm gonna be willing to add my short position. So that's what I'm looking out for. If I can see a pullback, actually I missed this short right here. I could have added to my short position and been 2 shorts right here. But anyway, I already placed a sell limit order. I placed a sell limit order at this structure right here. If price can pull back to this structure right here, I should be able to have it pull back right here. No, I'll be able to have another short entry, which means if price can make a pullback to this level right here, this could be another double head and shoulder in this downtrend. Can see. So if price can make a pullback, this would be the left shoulder, the head, and the right shoulder. So I'm trying to play out a potential right shoulder, if price can make that pattern. So I placed a sell limit order right here. So I will never jump into the trade, because a lot of traders actually right now are actually jumping right here. They keep jumping in. I don't jump into the trades. I look out for a better price offer before I make an entry. So this trade is currently in profit right now, and then I'll keep on riding it. My strategy, I look out for bigger fish in the market. I don't look out for prawns or crayfish. I'm not after crayfish. I'm after whales, sharks. I'm after big animals in the ocean. So that's what I do. I don't feed on small animals, right? So right here you can see, and based on what I can see on this currency pairs, I'm supporting more downtrend. And if this can occur, then it means we have a potential what we call the descending triangular formation. So I'm trying to trade the first breakout of this triangular formation. So let me reduce all these trends right here and then show you what I have. Because most of you guys, you don't tend to view the chart with an eagle eye. So let me show you what I can see on this chart. I can see a lot of things right here on this chart. So let me show you some of the things I can see on this chart. And then I try to target this eye right here. This is the high I try to target, and then all the way to this structure right here. This is a descending trend line, a first breakout, and I capture the low swings at this structure right here. I fired it all the way to the top. You can see that. So what I'm looking out for is if price can make a break. If price can make a break from this structure all the way down. So let's see if this level right here can act as a breakout of a descending triangular formation. And then as well, take note of the shoulders pattern we got. We got a shoulder pattern right here. This is the left shoulder, the head, and the broadening right shoulder. So I'm trying to play multiple patterns right here. I'm trying to play an upright head and shoulder neckline breakout, and that's where you could call this a descending triangular formation, but I would rather call it potential upright head and shoulder chart pattern. So I want to see how price is going to break this level right here and then continue downward. So this is based on an aggressive early entry right here. So I'm charting downward. So this is based on what I can see on the higher time frame, and this is why I always encourage you guys to go on the higher time frame. Once you go on the higher time frame, you see there's a lot of bigger images you can't see on the lower time frame. So you can see right here we got a resistance structure. This is the resistance structure. So price is trying to close below this resistance structure. And the next structure I'm going to be targeting as a long-term trader is I'm going to be targeting this structure right here, which is actually a support structure right here. and we got it as a resistance structure right here. So I'm hoping for price to make a pullback to this structure right here as a support. So this way I'm going to be going out. So this could be a trade that could lead to next year. This could lead to next year, 2024, right? So if you are not well prepared for this trade, no, there's higher chances you won't take better advantage of this setup. So it's not a trade for day trading or scalpers, and that is why I see a lot of traders trying to trail their profits, have a tight stop loss, because you are a day trader and a scalper, right? So I don't think this is not a trade for day traders and scalpers. You need to understand, you need to know how to identify setups that correlates to your trading styles. So I can't find the functions or tools in my chart. What should I do, brother? I can't find the functions tools in my chart. What can I do, brother? Is it on TradingView? I think I need to create a content on how to use TradingView and how to set your TradingView chart, because a lot of traders are actually having problems on how to set their TradingView and then to make it look nice like this, right? Okay, good. So this is what I have. I'm going to be targeting all the way down, and then if I'm going to be targeting down from this structure all the way down, it's going to be like almost 950 pips, right? So I'm hoping for at least 1,000 pips. So this is what I do. Let's see how it goes. Let's see how it goes, right? Let's see how it goes. So this is not a trade for the baby traders or the amateurs or the day or scalpers. This is a trade for long-term swing traders, right? These tools on the left side, you cannot see the function key, whatever, or I don't seem to understand. No, these are the tools right here. We have a lot of tools right here. You know, I have to favorite all these tools right here. These are the tools right here. To make your tools to be in this horizontal format, no, you have to favorite your tools. So this is what I did. You have to favorite them. So any tools you want to do, just favorite them. You favorite them and they to appear at the horizontal tool section right here. So that's what I did, right? So that is what I'm doing. That is the current position I have on DP paired against the Australian dollars, right? So that is the only position I had. And I told you guys how I closed my position, all my 4 positions on US oil yesterday. It was a massive, great profit, massive, great profit, massive ride, massive ride, massive ride. One of my best trade in this quarter of the end of this year. One of my best trades so far, right? So let's go through, let's analyze my risk to reward ratio right here. I made an entry right here based on, I had my stop loss at this high, and I rode the trend down. I closed my trade right here. That was almost 9 point, that is almost 3.5 risk to reward ratio. That was great. And then I made another entry right here based on the 4-hour chart. I told you guys how I got the trade on the 4-hour chart. I played my stop loss around somewhere right here, and I rode the trend all the way down. That is 3.5 right here. Okay, I told you guys how I made an entry on the day chart right here, and I had my stop loss at this high, and I rode the trend all the way down. That is a 4.7 risk to reward ratio. I told you guys how I lost a 1x value right here. So I'm going to subtract this 1x from all this risk to reward ratio. And then I made another entry at this medium right here, and I had my stop loss at this medium right here, and I rode the trend all the way down. Actually, I don't think, let me see, based on the forward chart, yeah, this was where I made my entry at this section. Right, actually I tried to make sure I was able to make a minimum of 2 risk to reward ratio. That's what I always do, right? And based on the 2 risk to reward ratio, my stop loss was around this zone, yeah, which I was able to achieve the 2 risk to reward ratio, right? And you can see that. So now let's calculate all my risk reward ratio which I gain on this market right here. So on the first trade right here, this is 3.5. So let's get our calculator on our chart right here. Okay, here comes my calculator tools right here. So this is the 3.05. that is 3.05 plus 3.59 plus 3.59, and the third entry 4.72 plus 4.72, right? And the last trade, which is 2, that is 2 risk to reward ratio plus 2 risk to reward ratio. So I gained 13.36 minus the 1x value I lost. So let's minus this one value. So I was able to make 12.36 to reward ratio in this market. So imagine you made a 12.3 risk to reward ratio on a trade. Consider as a massive profit. It's a massive profit. That is a wonderful profit. You can see that. So 12.3 risk to reward ratio. So imagine you risk on your X value right here to be $1,000. Imagine you risk $1,000 right here, and then you multiply it with your 12.36. You know what that means? That's almost $12,360. You know, and then right from Monday of October, that was the last month of October, all the way down, and then yesterday was 16. So I held this trade for almost 17, or let me just say, let's count the numbers of business working days right there. From Monday, we have the Friday, that was first week. We had another Friday, that was second week. We have another Friday, that was 3 weeks. So I held this position for 3 weeks, for 3 good weeks. So how many traders can do that? So if you want to make money in the market, you need to learn how to exercise patience. Patience, this is the way you can make money in the market. You can't make money by just jumping from one trend to another, trying to follow or jump from one trend. You can't make money chasing the trend. You need to trade only when there is need to. You don't trade because you want to, but only when there is need to. You need to trade when there is need to trade, not because you want to trade. So you need to be able to identify those two words. You have to trade because there is need to trade, not because you want to trade, right? So this is an example right here. And imagine if you are running an account whereby you risk $10,000 on your trading account right here on this trade right here. That is almost $120 and $3,600. So you can see right there. So it's not just about the numbers of trades you take. Just one setup can give you the money you need for a month or even for 3 months, right? Just one setup. You need just one setup. You need just one strategy. You need just one asset. You don't need to trade all the assets in the market. You don't need to initiate a lot of currency pairs. You don't need different strategies. Just one strategy, one asset can give you money in the market, right? So this is why I always tell traders, you don't need to jump from one strategy, from one asset, from one this to blah blah blah, right? Okay. So this is what I have on this asset right here. Okay, so now let's check out other assets we have. So a lot of traders have been asking me about GBP/USD. I told you guys yesterday what I can see on GBP/USD based on my own type of trading. I don't like the setup right here. Anyways, there's a possibility of a double bottom to form right here, but I am not going to be taking this trade based on this Friday. I'm going to wait for price to done with whatever it wants to do today, Friday. So I'm currently not looking out for any trade right here. I'm just waiting to see what the price has to market has to say. So today is Friday. Most investors are on weekend. Most investors have gone for weekend. So on Friday, you know, I'm so very careful. I'm also selective of trade. And based on the winning trade I had this week, I don't think I'll be trading this week again, or even maybe next month. I mean next week. Of course, December period, I don't usually trade in. December period is a time whereby I go away from my chart, you know. So I don't think I will be trading next week. If I will be trading next week, I'll be selective. You know, I told you guys, you know, it was a wonderful month and a wonderful last quarter of the year. And then I still have an existing trade on British pound sterling paired against the Australian dollar. So I'm still going to keep on riding that, keep on capitalizing on that. As you all know, I'll keep on capitalizing on that. So if I'm shorting GBP paired against the Australian dollar, then it makes no sense for me to long GBP paired against the USD, right? If I'm doing that, it seems I'm just don't know what I'm doing. So I will only be interested to long GBP paired against the USD if I can see a strong technical reasons. And then I would have traded my trade to break even or to some profit on GBP paired against the Australian dollar. Since my trade on GBP paired against the Australian dollar right now is just in its early stage to generate profit. So I am going to be very careful of adding trades, right? So this is what I think. This is my view, right? And for those of you who have been asking the analysis on GBP paired against the Australian dollar, this is what I can see. Anyway, this market is a ranging medium. It's a very dirty market right here, but we can see some pattern right here, right? I can see a potential dirty right shoulder right here, I mean left shoulder. right here, left shoulder like a top, like a right shoulder, and the right here as the neckline. Okay, so if price can break this structure right here, we expect more downtrend, right? So that is my view on this asset based on the 4-hour chart. So try to check the assets on your chart and then try to see if it correlates to your trading strategy. And as well, this market is bouncing within a range medium, right? For those of you who don't know, we have a range medium right here. From this structure right here, you can see we got a range medium of price. So price keeps on passing up and down, passing up and down, right? So let's see, maybe price is gonna break the low of this band all the way down. Okay, so that is my view on the GBP paired against the Australian dollars. So guys, you can suggest any asset you wanted to analyze in the live stream. Make a suggestion. Make a suggestion, any asset you want us to analyze. If you have any asset you want us to go through, make a suggestion, make a suggestion, make a suggestion. Let's go through them, right? Drop your suggestion. Drop your suggestions. Suggestions are welcome. Make a suggestion, any asset you want us to analyze, right? I'm gonna leave my chart maybe in the next 3-4 hours from now and then go for weekend or vacation, go for goving. Right, so I'm gonna be back maybe on Sunday evening. Right, I'm gonna be back on Sunday evening. So you guys make suggestions before we shut down the live stream. I can't see them. I don't know why. You need to see this on your chart. If you're on your computer, if you're using a trading view, you need to see this on your chart. You need to see this on your chart. Maybe you have to try to reset your settings, right? Right, guys, drop your suggestion, any asset you guys want us to analyze in the live stream. Let me know. And let's go through the crypto market. I am currently monitoring the Dogecoin, and there seems to be a breakout. I share this setup with traders in my Telegram group. Yes, Dogecoin, you can see that Dogecoin. I can see a potential breakout. You can see that Dogecoin. So if you're a crypto trader, Dogecoin is on the move. It's on the move. I already accumulated some Dogecoin right here, so I'm waiting to see how far price can go. Right, I already sent this this week based on being in my Telegram group. I showed you guys I'm gonna be accumulating more Ethereum. Right from the swing low, we fired our trend line all the way to the swing lower low, and then all the way to the top. So let's hope price is gonna be respecting this trend line and then keep bouncing up. So that's my view on the Dogecoin. That's my view on Dogecoin. If you trade Dogecoin, you could check that on your chart. You could check that out, right? So let's check Bitcoin, BTC. Here comes BTC. I told you guys BTC. My analysis is still active. For those of you who want to buy high right here, my last analysis was about price need to come down to this structure right here. Price needs to bounce down to this structure right here. Okay, so that's my view on the Bitcoin paired against the USD. Right now, what else again? Let's go through Ethereum. This was my last analysis. Let's see what price is gonna offer. Price is struggling at a resistance structure on Ethereum. See, you have a resistance structure above, but we have a kind of ascending trend line. You can see that ascending trend line. Ascending trend line, we got it right here. We got the upper resistance. So let's see, maybe price gonna break up and then continue to the upside. So that's my view on the Ethereum, right? Let's hope price gonna continue to the upside. Right, guys, on Friday, I don't usually spend much time on analysis because I'm still going to make an in-depth analysis during the weekend, all right? So this is an opportunity for you guys to ask me questions. If you have questions in relation to trading or any analysis, any asset you want us to analyze, let's go through. And the Solana as well is currently going to a potential key level structure at the 77.41. So if you're a trader trading Solana, you should be looking at to trade your profit or get out of the market, right? So I told you, I shared this setup with traders when it broke this level. That was in October. And I accumulated a lot right here. So I'm currently made over 100% return on my portfolio, which was great, right? I just invested some of the funds I want to spend during this Christmas and New Year period. I invested it right there. So I've multiplied all the finances right there. I've multiplied all the savings right there. So which is great. It's actually great. That's interesting, right? So instead of keeping your money in the bank, I don't keep my money in the bank. These are what I do: invest them in stocks, crypto. I hold them, I put them in my wallet, and I'll buy stock, buy shares. What I do, right? So the crypto wallet and the stocks, portfolio. These are where I put my money as savings. I only have money for emergencies in my bank account. That is an emergency funds, money I need to do some things, right? So let's check gold. Gold XAU paired against the USD. Gold is going crazy. It's going up, up, up. It's going up. So I'm looking to see what gold is gonna resort to before the ending of this week. Maybe gonna give out a double top. Let's see, maybe gold is gonna give us a double top. This could be top one. Maybe we're gonna have top two right here, and maybe this is gonna be a neckline. Right, let's see. Maybe next week is gonna be rotation to the downside, a retest, more rotation to the downside. Let's see what's gonna happen right here. So currently gold, I'm not doing anything on gold, and they have a trend line on their 4-hour charts. You can see the trend line. So if you want to trade gold, the best way to approach this asset is keep on looking for a test of this trend line. Look for a test of this trend line. It bounces off, you make a long entry, bounces off, but when price get to the resistance peak right here, you gotta be very careful whenever price get to this level. So don't long into resistance, right? Because there's tendency price could break this trend line and then make a pull down and then continue the way to the downside. So this is what I can see on gold. This is what I can see on gold, right? This is what I can see on gold, on gold. So let's check other assets. As well, I'm monitoring the chart of AUD or USD paired against the Canadian dollars. You can see that. That was a trade opportunity on this asset right here. That was at the break of this trend line, but it was kind of a messy, very messy, choppy market right here. So I am currently monitoring to see how price is going to react all the way down to the rising trend line from the low swing right here. We got a test right here. Let's see how price is going to react to this level. Maybe price is going to break this level all the way down, break it and then come down. So this is a trade for next week. So if you're a trader, keep on monitoring these assets next week. USD Canada is setting up for next week. So these are the list of currency pairs you should put on your record list for next week, right? I told you guys about USD JPY yesterday. I said no. A break from this trend line right there, you see price needs to clear the support structure. So we had a break right now, but this break is not yet confirmed because the daily candlestick is not yet done with its formation. So price can still reverse it up and form like a pin bar or a bullish reversal candlestick, right? So let's hope price gonna make a daily close. But based on what I can see on the forward chart, that's a great momentum. So if you want to make an entry based on aggressive entry, you could be looking out for a pullback to this structure. Pull back to this structure right here. Pull back to this structure. You could sell a sell limit order. Have your stop loss at the low high swing right here. And then if you're gonna be going down the way to this structure right here, it's gonna be 1.2. Right? So if I'm gonna be taking this trade right here, 1.2 is gonna be kind of too not okay for me, but it depends on what I can see right here. If I can see a strong technical signal right here, I can find a way to reduce my position, my risk, so that I can have the minimum to risk to reward ratio in this market before the market reverses. So I can just have it my stop loss or this structure, so that I can have the minimum to risk to reward ratio. So it depends on what I can see at the retest of price right there. If you can see a strong technical signal, then that would be nice. So instead of placing my stop loss at the edge of this technical signal, I will just have it a distance away, so that I can have the minimum to risk to reward ratio. So that is what I do. So alternatively, anyways, I'm not saying I'm going to trade this asset. Of course, there are a lot of assets in the market. If I can see any asset that has more clean and more nice setup, low risk and a high reward ratio, better than this setup right here, then I will devote my attention to those assets. And I told you guys I'm selective now. You know, it's almost coming to the end of the year. I'm selective. No, I've made my mission has been accomplished. Mission accomplished this year. So right now, I'm just gonna be selective. Any trade I'm gonna be trading, I'm gonna be taking a very small position size because I've achieved my budget, my mission this year. No, even above what I expected this year. So I don't want any trade to ruin my result this year. So I'm gonna be very careful. And then I have different accounts. So majorly I'm gonna be trading on my backtesting account, so not on my real portfolio account, right? Good. Right. So this is what I want to share with you guys. Since you guys are not dropping any questions, since you guys are not asking questions and not making suggestions for assets to analyze, then I think you guys have gone for vacation as well. So Uti from YouTube asked for Euro New Zealand on YouTube. So let's go through the Euro New Zealand on YouTube. Euro New Zealand. So if you guys don't want me to end the live stream, just make suggestions. Let's make the live stream to be lively, right? I gave analysis about GBP USD already, right? So Euro New Zealand, wow, this is a very choppy market for me. Euro New Zealand, what I can see right here is still a very choppy market. I can't see any trade opportunity right here. It's kind of too very choppy for me. No, I don't see any reason to be in a Euro New Zealand to be looking out for trade opportunity right here. So it's kind of very choppy. So based on what I can see right here, no, I think you better wait for and better not put yourself in a very complex and a very difficult trade right here because price is still struggling. There's still struggling of price between the bulls and the bears, and this is why you see the weekly candlestick is trading like a doji candlestick. Anyways, the weekly candlestick is yet to be formed, but based on what I can see right here, this is like a double top. You can see we had the first rotation up, we have a doji candlestick, we have another rotation up, a doji candlestick. So this is like a double top. It's like a double top. Right, so if you go to the lower time frame, you're gonna see it's like gonna be like a double top. This is how you decode candlestick on higher time frame to have an idea of the lower time frame. So if you check this right now on the lower time frame, like the day chart, you're gonna see what I stated. I said it's like a double top, so I don't need to look out for what is happening in the lower time frame. Once I see what is going on the higher time frame, I can have an idea of what is going on the lower time frame. So I don't need to check the lower time frame to see what is going on. All I just need is the higher time frame. I told you guys on the weekly chart, I said what is going on right here is going to be like a double top. Most of you guys don't know this like a double top on the lower time frame, right? So and when I switch to the day chart, you can see it's like a double top, right? So let's just wait for the formation of this double top. But if you want to make an entry based on an aggressive entry at the right shoulder of a top, you need to reduce your position size because you don't yet know if it's going to be a real or it's going to be a fake double top, or maybe price is still going to continue to the upside. So you are making an aggressive entry, and whenever you make an aggressive entry, you have to reduce your position size because you're not yet sure of the pattern. If you go to the 4-hour chart, it's going to be very obvious, and this head and shoulder is going to be very wide on the 4-hour chart. So when you go to the 4-hour chart, you're going to see right here now it's very wide, very wide, and you can see right now the 4-hour chart is kind of very difficult to analyze or to have an idea of what is going on because you are trading on the lower time frame, right? But based on the 4-hour chart, we can see another potential double tops rising right here. So you could just make an entry. If you could make an entry at this medium right here, and then put your stop loss at the high right here, and then you target it all the way down to the neckline. So you have like a 1.7, and then you could reduce your risk to have at least a 2 risk reward ratio. And take note of this rising high right here. This is a higher low to this higher low swing right here. You can see that. So you have to be very careful. It's a double bottom. So you gotta be very careful if you wanna be looking out for trade right here. So let's see if we can connect our trend line right from the swing right here to the swing right here. Fire it to the downside. Okay, we have our 2 touches. It takes 2 points to construct a trend line, but it takes 3 points to confirm a trend line. So based on what I can see right here, the choppy market right here is in the bullish side. So if you are making a short entry right here, it's called an aggressive entry. And whenever you are making an aggressive entry, it means you are making an early entry. So you have to reduce your position size. For example, if your initial position on a trade is like $1,000, right? Then you can just divide it into like 5 places, right? And then you make it to be like 200, no, right? Yeah. So should in case things goes against you, you just have to risk $200 instead of risking $1,000 should in case no market go against you. So that is the best way to do if you want to make an aggressive entry right here, right? Because I know a lot of traders are going to be willing to make an aggressive entry, and there's most of the time when you make an aggressive entry without proper confirmation, no, you get your fingers burnt, right? So this is what I can see on the day chart and then on the weekly chart. But if I were you, I would rather wait for the weekly chart to be done with its formation before I can gonna be acting maybe next week. And if I can see other asset that has more simple technical patterns and then low risk to high reward ratio, then I would rather divert my attention to that asset instead of taking a trade that is so complex, right? Since trading is difficult, why do you want to make things to be more difficult for yourself? Okay, think about that. So GBP against the USD right here. This is what I can see right here. You know, I told you guys based on what I can see on the day chart, I can't say anything realistic right here. And then I'm gonna wait for the end of price. It seems like we're gonna have a double bottom, but I think this is for the scalpers and the day traders, right? This is the double bottom right here. So for those of you who want to take double bottom, this is the first bottom, this is the second bottom, and then this is the neckline. But this pattern is yet to be confirmed. If price can break out, make a putback, and then continuation, then you could scalp or day trade as a day trader. But I'm going to be looking at, I am not interested in what I can see right there because it's Friday. I just want to hope, no. And in fact, I'm selective of trade right now based on the return I've made on my portfolio this week. You know, I told you I closed a massive profit of 11.8% on GBP paired against the USD. I told you guys during the employment and unemployment news. And I told you guys I closed my positions yesterday on US oil, 4 short positions in massive profit. So I'm done for this month. I'm done for this year. So the remaining of this year is just to be selective and then maybe even make the decision to go on vacation or not even to trade again. So, okay. So I'm so selective right now taking trade. And most of my trade right now is going to be selective and it's going to be on my backtesting trading account, not on my portfolio trading account, right? So that is based on my personal decision, right? You need to learn how to take a break from trading so that you don't go into over trading, right? So not every day you gotta be trade. It's not the number of days you trade that's going to give you profit. It's just about knowing when to take a break when you need to, right? So GBP paired against the USD, done. Euro paired against the New Zealand by Uti on YouTube, done. And then gold by FSP trading, done, right? So I'm going to put an end to the live stream since you guys are not dropping suggestion of asset to analyze. I believe you guys have gone for vacation, which is okay, which is understandable. You know, on Friday, you know, you got to take a break from working, spend time with your family, spend quality time with your loved ones, right? And this is what I'm going to be doing right now. I'm going to be preparing my bags, you know, my luggages, and then take a break, go do what I love to do, right? So in the next 2 minutes, 3 minutes, I'm going to put an end to the live stream if we have no suggestion or any of suggestion or questions, right? Great. So the stock market, I'm still monitoring the stock market, and then I have a different asset. Let's check what is going on the Apple. Yeah, we got an Apple right here. It's a doji candlestick to resistance, low high swing right here. So this is a trade for next week. Let's see what's gonna happen right here. You can see we got a resistance, low swings high, low swings high. Based on Apple and based on Tesla, you know, there's a kind of formation going on Tesla right here. I can see like island, like an island pattern right here, like an island right here, a gap, no, a gap right here, gap at the top. But based on what I can see right here, it looks like an evening star variation or an island or a reversal island, breakaway island, you know. Based on what I can see right here, this is a signal of a bearish sentiment. So if you can see a strong bearish close below this gap, or if the market can gap all the way down and then this gap is not filled, then it's a signal there's still more downtrend to rally to this swing support of the 206.93. That is on Tesla. So this market right here is kind of too complex right now. I told you guys I accumulated the inverted head and shoulder breakout right here. So this is one of the factors in trading you have to put into consideration, because no strategy is infallible in the market. So you have to be very careful before you make the decision. Don't trade more than you cannot afford to risk or lose, right? So all the way down right here, the double top, Price gonna test this level right here. So I'm gonna have a key level structure right here. The neckline for the double top. You know, we have a lot of tops pattern right here. This is the first top, second top. We have like double tops or upright head and shoulder right here. And we got like double tops right here as well. We can tag the structure right here as the first top, and then right here as the second top, right here as the neckline. Is this gonna be a neckline? Is this it put back to the neckline? This is what we need to find out as a trader, right? So we put back to this level. Let's try to see our Fibonacci retracement to how it aligns to price action from the swing low high right here to the swing low right here. You can see we're actually getting a rejection from the 0.618 Fibonacci retracement level, which is another factor we have to put into consideration. So based on what I can see right here, the Tesla is poised for a potential bearish move. That could be next week. This could even happen this Friday, right? Because the market is here to open right now. So anyway, I'm investing right here as ownership, as I'm holding some shares of Tesla, and then I'm still gonna be holding because I believe so much, you know, in this stock, right? Because I believe so much in the future of green energy, and which Tesla is electric, no vehicle, so it's still the leading in industry. So I'm still holding these shares right here, but that doesn't mean if things doesn't go the way I planned, I won't exit. Of course, I have a trend line right from the swing low right here to the swing higher low structure right here, all the way up. So let's see if price can break this swing, ascending swing right here. If price can gravitate to this structure right here. Let's see if this level is gonna act as a rejection to the upside, right? So that is the next phase. That is the next thing I'm looking out for on Tesla. Right, guys, no suggestion. I gotta put an end to the live stream. If you are watching from YouTube, you can make a suggestion of any asset you want us to analyze. If you are watching from TikTok, you can make a suggestion of any asset you want us to analyze. You can also ask me a question in relation to trading. If you have any difficulty in trading, you can present your problems. Let's see if we can both work through together and give solutions to your problem, right? We just have like a 3-4 minutes to go right now. After the next 4 minutes, I'm gonna put an end to the live stream, right? So let's check out other stocks right here. Amazon as well. Amazon, I got this price at the resistance structure, so this is why I'm very careful. Consider resistance right here. When price got to the resistance, we got to pull back to the downside, you know, breakdown to the downside. We're gonna have a potential breakdown, but the next level you have to watch out for if you are investing in the stocks of Amazon is the minor structure we had, which was the neckline of the double bottom we got right here. First bottom, second bottom. We could have a pullback to this structure right here before we maybe have it to the upside. So this is what I can see. And then if you can have this could lead to an inverted head and shoulder chart pattern. If you can have this right here, this could be the left shoulder, the inverted head, and maybe the right shoulder, and the top right here could be the neckline for a more bull breakout. So this could lead to an aggressive bull rally on the Amazon, and don't be surprised if the stock of Amazon rallied all the way down to 200 and then keeps on rallying up maybe to 300 above, right? So this could be a rally, a long-term rally for next year. So it has done this before, so it's capable of doing that, right? So this is what I can see on Amazon. So I'm still watching these assets to see what's gonna go up right here. Someone said, do you prefer pro-firm account or live funding? It all depends. It all depends. If you don't have an angel investor, if you don't have people to fund your trading account, then you can try out pro-firm account, and they'll make your intensive research before you deposit and start trading. And based on my years, based on traders' experiences and reviews, if you're a beginner trader, if you don't really know what you are doing, if you are still going through the process of learning, then I don't think you have to sign up for a pro-firm account, because there's higher chances you won't be able to meet up with your requirements if you are a new trader, struggling trader, right? So pro-firm is for like trade people who can trade, because on most pro-firm companies you are given a limit or a time limitation, or maybe you make certain amount of money within 30 days or within a month, and if you can't pass that, then you lose your account, you lose your money. And based on my years of experience, I don't like to trade under pressure. I like to trade under my normal condition, that normal atmosphere. I don't want anything that tends to cause a state of imbalances in my emotional state, right? So this is why Currently, I'm not a fan of all those pro firm, no, but we have traders who make money right there. But based on my own trading strategy, I don't want anything that's going to put me under pressure. So if I can make 5% in a month, good. If I can make 10%, good. If I can make 20%, good. So it all depends on how the market comes. So I don't want to make that decision or prediction that, okay, this month I want to make 10%, next month I want to make, no, I don't do that. It all depends what the market gives me. Whatever the market gives me, I always appreciate, right? I appreciate whatever the market gives me. So if the market gives me 2% in a month, or 3%, or 10%, or 20%, I've done it before, 20%, 30%. I showed you guys last month almost 18%. This month already, on a single trade, 11.1, 11.8%. So I'm a radical trader. Sometimes it could be 3% in a month. Sometimes it could be 30%, 20%, 10%. It all depends on what the market gives me. So, and then I know once you can trade, you have people who will fund your account and you trade and they will manage your funds, and then both you guys work on the profit ratio splitting or whatever. So if you know how to trade, you can consider pro firm account, make your research. If you have people who can fund your account, you can work up with them with your track record, show them, they see you can trade, and then they can entrust your money with you, and then you trade for them. So it all depends on your trading experience. So if you're a beginner in the market, I don't think the best thing to go is your pro firm account, because there's a 90% chances you will blow up your account or you won't meet up with the expectations. And then also take note, most of these pro firm, most of them are fraud, right? I don't like to measure any company's name. I don't measure any company's name, but you guys can go online and they'll make research about pro firm fraud, reviews. You go right there, you see a lot of information on the internet. So most of these companies are fraud, and most of these companies, they kind of make their system whereby they make different rules, very difficult rules for you to be able to pass the face. Because the more traders fail on the platform, the more money they make, and the more money you make, most of these firms don't have the fund to pay you, because they have to gather money from traders who buy their packages, their subscription, and when the traders fail, they have to pay traders who are successful from the funds they get from traders who subscribe or join their phase and failed. So the more traders make profit on that platform, that will be problem. So most of these pro firms are like a pyramid scheme or whatever, So you have to be very careful when you sign up. Go online, make research. If you have a lot of reviews which are positive than the negative review, then you could try it out, right? But based on my years of experience, the first thing you need to do is learn how to trade. If you can trade properly, you definitely can grow your account without any pro firm. And then if you want to go into them, you actually know what you are doing then. But as a beginner, I think the first thing you have to do is learn to trade first. As a beginner, don't think about the money. Forget about the money. If you think about the money, you won't make money. That is the reality about trading. If you think about the money, you keep on blowing your account. If you think about the money, you get frustrated, you give up. If you think about the money, you always take risk, which you shouldn't be taking. So if you focus on the money, you won't make the money, because your mind will be engulfed with that extrinsic of trying to make money, or so knowledge first. Once you have the knowledge, money will come. When you learn, then you can earn. So you can't just earn without learning. You need that knowledge first. That's the first thing you need to know, right? So the pro firm are going to be very happy if amateur or beginner traders want to sign up and start trading their platform. Of course, that is how they make money. So if you guys don't fail, they can't make money. If you guys don't buy their packages, their plan, they can't make money. So the more you guys fail, they are happy, just like a brokerage firm. The more you fail, your brokerage firm are making more money. And when you make money, they are not happy. So that is why sometimes some brokerage firm have to manipulate their system to make sure you fail. The same goes to the pro firm. Even the pro firm are even worse, right? So make your research before you deposit on any pro firm, and then make sure you know what you are doing. That is very important, because even if you have a good broker firm companies, if you don't know how to trade, you won't be able to make any result with that, right? So if you are a good trader, if you are unfortunate to sign up on a fraudulent broker firm account or on a pro firm account which is not transparent or fraudulent, you'll be able to know at the early stage that, oh, these people are fraudulent or whatever, because you have the experience of trading. I have a complaint about a trader who attended my live stream like 2 days ago, who stated, he mentioned one of the pro firm company he was using, and he stated his stop loss wasn't it, and his position was being terminated. So such are examples of negative reviews about this pro firm and brokerage firm. So you're very, very, very careful. Right? So for now, I only recommend my brokerage firm, and this is the brokerage firm I've been trading on. So I'm a kind of person, I don't recommend whatever I haven't used, right? So that is that about trading with pro firm. Okay. So next questions. Next questions about trading or analysis. Let's go through. USD Canada. I gave analysis on USD Canada. I told you USD Canada. I think I'm waiting for next week. USD Canada, I gave analysis already. I'm waiting for next week on USD Canada. The pattern I can see in USD Canada is actually setting up for a bearish sentiment based on USD Canada. So this is a trade for next week. You can see, guys, right here we got a rising wedge. So let's hope price is gonna find a rejection right here or break to the downside. So based on what we have on USD Canada, I already give this analysis right here. No, based on what I can see, there's a lot of setup of bearish sentiment, right? I can see a potential right left shoulder right here, head right here, and a potential right shoulder right here, and this could be the neckline structure. So let's see, maybe price gonna break this neckline structure, make a retest, then all the way down. So this is what I'm looking at for next week. I told you guys this is a trade for next week. USD Canada is a trade for next week. It's on my list for next week. So next week I'm gonna be looking out for how to trade it on my backtesting account, right? It's an account I take most trades on. So that is my view on USD Canada. Alternatively, next week, if the market should come to this support structure and then have it bounces off, it may price still want to gravitate to the highs of the market, right? So that is my view on USD Canada. LK, I think that is LK from United Kingdom, right? So that is what I have. That is what I got on USD Canada. That's what I got on USD Canada. So I got out of the US oil. I got out, and the market is currently reversing right now. Reversing. But I see how the trend line still active. See how the trend line still active. You can see that. So I know this is a strong support structure. Price is gonna reverse, pull back. It's gonna pull back. Price is gonna pull back to the upside. So guys, you are welcome. LK, you are welcome. So guys, gotta start preparing for my weekend vacation. Yeah, gotta start preparing. No, gotta start shutting down my system, my computers. They have been working from Monday. Actually, I put them on starting from Sunday evening. From Sunday evening, they're gonna be on. From Sunday evening, they're gonna start working till Friday, like 2-3 p.m. before they go down. So they're gonna cool down. Then maybe Saturday sometimes, but most times they are gonna be on for serious work around evening. Because most time I use my laptop, to make analysis during the weekend. So my desktop are gonna be off. So yeah, thank you guys. Thank you from YouTube. Thank you for TikTok. And make sure you like my videos. Like the videos. Put a comment down. Immortal One, you are welcome, but you are late. I'm about going for my weekend. Thank you guys. So we continue the next discussions in the Telegram group. So I am in the Telegram group all the time. No, I have my access through my smartphone. So whenever you send any question or have anything you want us to talk about, just send your questions, your requests in the Telegram group. I'm right there 24/7. If I'm not right there, my hardworking AI is right there. This young lady is always right there to modify, to moderate whatever is going on right there. So 24/7, my AI diligent and hardworking staff is right there. Okay, so she's gonna moderate whatever is going on and give you information. And if I have to come in, I'm gonna take over, right? So you guys can ask me questions, and I want you guys to be active in the Telegram group. You guys shouldn't just join the Telegram group and be silent, right? Let's talk, let's discuss, share your charts, discuss, share your chart, right? We have a lot of experienced, profitable traders in the group. You can as well ask questions from them. They are right there to support, to help you, right? You don't have to wait for me to give answers to your requests or questions. We have traders who are profitable right there, who are experienced traders, who are also killing it in the market. So ask them questions, right? Rub minds together, share your experiences in the Telegram group. And that is the purpose of creating the Telegram group, so that we can build a strong community where we can share skills, knowledge, education, right? Thank you guys, and I hope to see you. That could be maybe Saturday or Sunday. I can't tell right now, but I know we're gonna see this week, right? So have a wonderful day, good morning, good evening, good afternoon, right? Thank you guys.